What's up, everybody? Welcome to the fourth episode of the Investing Penguin. Covered calls and cash secured puts. For those of you who don't know me, I am the Penguin. And in this video, I want to share with you my success with PSX Phillips 66 stock using covered calls and cash secured puts. Between July 9th of 2020 and May 17th of 2021, I profited $19,251.59 on PSX using covered calls and cash secured puts. I rode that stock like a circus pony, making crazy high annualized returns the whole time. In 2020, the price of oil got hammered due to COVID, and the price of a barrel of oil actually went negative at one point. That's a whole nother video, but I really didn't think oil prices were going to stay low forever, so I took a chance of buying PSX and some other oil stocks, and I used covered calls and cash secured puts. I bought PSX 4 times, writing covered calls and making great annualized returns. Rinse and repeat, baby! The covered calls helped me weather the downside risk of owning Phillips 66, because right after I bought PSX, it kept sliding down and down between July and November of 2020. The cash secured puts also helped me generate cash flow, and we all love cash flow. I still own PSX today, and I'm still making great annualized returns. So in this video, I'm going to break down all of those monster money-making transactions. So let's dive into this. On July 9th of 2020, I bought 300 shares of Phillips 66 at $59.52 a share. Then on July 13th, I sold 3 covered call contracts for 74 cents for the July 17th expiration and the $63 strike price. I collected a premium of $219.99. On Friday, July 17th, PSX closed above $63 a share. So the following Monday, my 300 shares of PSX were sold at $63 a share. I made a profit of $1,263.53 for 11 days, which is a 234.8% annualized return. And that is a crazy high return. Here is the same transaction, but I've included the snapshot of my spreadsheet analysis for covered calls and cash secured puts. As you can see, it calculates the 234.8% annualized return. Once again, that is a crazy high return. Then I decided to sell a cash secured put. I had the potential to buy 300 shares of Phillips 66 at $62 a share. On July 20th, I sold 3 cash secured put contracts for $1.11 for the July 24th expiration and the $62 strike price. I collected a premium of $330.98, and if PSX closes below $62 a share on July 24th, I was buying those shares at a discount, which was fine since I was interested in owning PSX anyways. However, on Friday, July 24th, PSX closed above $62 a share. The option expired worthless, and I got to keep all the premium. I made a profit of $330.98 for 4 days, which is a 162.37% annualized return. And that is a great return. And then I did my second covered call with Phillips 66, and this is where the money machine kicks in. Check this out. On July 31st, I bought 300 shares of PSX at $61.22 a share. Then I averaged down as oil prices kept sliding. And on September 8th, I bought an additional 100 shares of PSX at $58.88 a share. Then between July 31st of 2020 and March 15th of 2021, I executed 10 covered call contracts generating over $2,100 in profits. I also collected 3 dividend payments generating $990 in dividends. On Friday, March 12th of 2021, Phillips 66 closed above $85 a share. So the following Monday, my 400 shares of PSX were sold at $85 a share. I made a profit of $12,000. $860.62 for 227 days, which is a 85.26% annualized return. And that is a great return. Here is a snapshot of those transactions in my brokerage account. As you can see, between July of 2020 and March of 2021, I rode PSX stock like a circus pony, making money and great returns. Here is a graph of Phillips 66 stock between July of 2020 and March of 2021. So you hear Wall Street gurus say you can't catch a falling knife, and there's truth to that. So I used covered calls and cash secured puts to lessen the pain of catching that falling knife during the oil slide. And I say thank goodness for covered calls, because I didn't panic and it helped mitigate my downside risk. And you also can't predict the top. And sometimes investors are hesitant to take profits due to FOMO, fear of missing out. But taking profits is a good thing, and using covered calls helps me lock in those profits. Thank goodness for covered calls, because I stayed in the game with PSX and I caught the upside rewards. And you can also see on the graph the 3 dividends that I collected, and that is the icing on the cake. So I sold Phillips 66 at $85 a share, and when it dipped to $79 a share, I did my 3rd covered call with PSX. This is where the money machine just keeps humming along, so check this out. On March 23rd, I bought 500 shares of PSX at $79.44 a share. Then on that same day, I sold 5 covered call contracts for $1.34 for the April 9th expiration in the $82 strike price. I collected a premium of $666.67. On April 9th, PSX closed below $82 a share. The option expired worthless, so I got to keep all the premium. I made a profit of $666.67 for 17 days. Rinse and repeat, baby. On April 12th, I sold 5 covered call contracts for $1.08 for the April 30th expiration and the $83 strike price. Take note how I moved the strike price higher this time. I collected a premium of $536.67. On Friday, April 30th, PSX closed below $83 a share. The option expired worthless. I got to keep all my shares, and I got to keep all the premium. I made a profit of $536.67 for 18 days. Rinse and repeat again, baby. On May 3rd, I sold 5 covered call contracts for 64 cents for the May 14th expiration and the $86 strike price. Take note how I moved the strike price higher again. I collected a premium of $316.67. On Friday, May 14th, PSX closed above $86 a share. So the following Monday, my 500 shares of PSX were sold at $86 a share. So between March 23rd of 2021 and May 17th of 2021, I made a profit of $4,796 for 55 days, which is a 80.12% annualized return. And that is a great return. But wait, the money tree is still growing. I think oil still has more room to run as we come out of COVID. I think there's plenty of pent-up demand for travel. So when Phillips 66 dipped below $86 a share, I bought it again to write another covered call. So come May 28th, we'll see what happens. Well, everyone, I hope you enjoyed this review of Phillips 66 stock using covered calls and cash secured puts over the last year. This is my 4th video, and there will be more videos coming each week. In my next video, I think that I'm going to share all my trades with AT&T over the last year due to their recent announcements. So make sure you check out that video. So blow up that like button, blast that subscribe button, and share this video with all your friends. Thank you for watching. Here's an interesting fact. On August 27th of 1859, George Bissell and Edwin Drake made the first successful use of a drilling rig on a well drilled especially to produce oil. This was at a site on Oil Creek near Titusville, Pennsylvania. The Drake partners were encouraged by Benjamin Silliman, a chemistry professor at Yale, who tested a sample of the oil and assured them that it could be distilled into useful products such as illuminating oil. Money music. I hear the 80s are making a comeback. I hope the younger generation will appreciate this music someday. I can't believe it's already been 40 years. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.